The S&P 500 just hit the 100th percentile, and the S&P at this level has historically marked a regime inflection. Something is breaking beneath the surface, and the data confirms it. Right now, the S&P 500 is at 7,398.9, the 100th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection, says the data needs to confirm. The commodity analyst says we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. The commodity analyst is right, and the data keeps proving it. Oil at $97.7, 141-day streak. Snyder called it dollar liquidity crisis. Yield curve at 0.48% confirms it. 3 days running, score 1 for the volatility expert. Volatility expansion, VIX agrees at 17.1. 3 days running, the dollar analyst just moved from early to right. The dollar analyst dollar milkshake higher call is paying off. Gold at $4,675 and trending their direction. McElroy is waiting on confirmation. The narrative holds, but the data has not validated it yet. 140-day streak. Hartman might be right, but the data has not confirmed the thesis yet. 134-day streak. Bad stretch for Gammon, for now. Investment grade spread at 79 basis points says the opposite of credit will blow out. 3 days running. Score today, 4 right, 2 early, 1 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question, are commodities in a supercycle, or is this the top? On one side, says the data needs to confirm. That is the setup. Everyone hears it on the podcasts. It sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here's what makes this interesting. Oil is rising while gold is falling. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. Oil at $97.7, 92nd percentile, up 2.4% today. Gold at $4,675, 76th percentile, down 1% today. Copper at $6.38, 99th percentile, up 2.1% today. Bottom line, right now the commodity analyst has the better case. Copper at $6.38, 99th percentile, says the data is moving their direction. If oil drops below $80, the supercycle call is in trouble. Right now it is at $97.7. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $97.7 is in the $97.7 is in the 92nd percentile. Reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,675 will track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here's how close we are to the edge. We are 71 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There's no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points. Currently at 79 basis points. Pace is flat or improving. No urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, copper-gold ratio flashing red. Snyder says the Eurodollar system is tightening and nobody sees it. The data agrees with that assessment. Phase 1 holds with 71 basis points of buffer. Conditions favor risk but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. Beaufort County, SC, payment burden is past the breaking point. Sheldon, SC, median home about $2,327,000 on about $117,000 household income. Price-to-income ratio, 19.9. When the math stops working, sellers find out before buyers do. Curry, or payment burden, is past the breaking point. Sixes, OR, median home about $415,000 on about $21,000 household income. Price to income ratio, 19.8. When the math stops working, sellers find out before buyers do. Clay, KY, lenders are saying no, at scale. In Clay, KY, the HMDA denial rate is 75.4% across 289 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Copper at $6.38 is in the 99th percentile. That means it is higher than 99 out of 100 days in the past year. In 2022, copper dropped 35% on China lockdowns and global recession fears. In 2020, copper crashed in March, then doubled over the next year on stimulus demand. In 2011, copper peaked above 4.60, then gave back 30% as China growth slowed. Different environments, different catalysts. But every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, oil at $97.7 is in the 92nd percentile. The last time both copper and oil were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, the commodity analyst is on the right side of this trade. The data is not ambiguous. Here is what the data says to do right now. Do not chase the S&P 500 here. The 100th percentile is reversal territory, not an entry point. Avoid Phoenix at 41% payment burden. That is stretch territory. Phase 1 holds. No alarms, but the runway at 71 basis points is shorter than last month. 4 out of 7 speakers are right. The commodity analyst, Snyder, the volatility expert, and the dollar analyst. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe, and I will see you tomorrow morning.